Hello friends, this is another video on split shares. I posted already one video on split shares, and that was in that video I actually explained to you what is a split share, how the split share work, how they manage to pay a higher yield than compared to many other ETFs or covered call option ETFs. And also I explained you that split share of two types. One is preferred shareholders and the other ones are class A shareholders or common shareholders or capital shareholder, whatever you want to call them. And I also explained you the importance of net asset value of the unit. So today's video, I'm going to explain you my strategy a bit more, although I explained that strategy in my previous video, but here I'm going to apply those points that I mentioned in my previous video, and then I will show you what kind of split share will I pick. So for that reason, I randomly picked two companies, two financial companies. One is QuadraVest company, and the other one is Brompton Financial Company. Both are very respected companies, and they have a bunch of split shares offered for your investors. For the QuadraVest, I picked four split corporations of split funds. First one is FTN, which is North American of Financial 15 ETF. It invests into North American banks, Canadian banks, and insurance companies. The second one I picked is DFN, which is Dividend 15. It is a diversified split fund which invests in a bunch of companies, blue chip companies in Canada. A third one is BK Bank Corporation. It invests mainly on 6 Canadian banks, and that's it. So all 6 Canadian banks, that's the split fund. And the fourth one is FFN, which is North America or North American Financial 15. It invests into North American financials and Canadian financial and a couple of insurance company. The difference between FFN and FTN is that FFN is invested more into US banks compared to FTN. So they have about a few more American bank in their portfolio compared to FTN. So these are QuadraVest 4 companies. The other 4 split share funds are from Brompton Funds Managers. They offer they actually offer a lot of very interesting ETFs and split share funds. So I picked randomly 4. First one is LBS. This fund invests into Canadian banks and Canadian top 4 what's called insurance companies. Second one is GDV. GDV is a globally diversified split fund that invests in heavily about 50% in the US, 20% in Canada, and then remaining 30% in the rest of the world. It is diversified by geographical region and also diversified by the sectors, which kind of stocks it holds. The third one is similar to BK, which is SBC. This is also investing into Canadian banks. It's very similar to BK that we had. And the fourth one is DGS. The DGS is also diversified. It's similar to DFN of a QuadraVest split fund. So at the moment, the situation is that FTN is offering 17% yield, DFN also 17%, BK offers 15% yield, and FFN is offering 36% yield. On the other hand, on the Brompton side, LBS is offering about 14% yield, GDV 12%, SBC 13%, and DGS 25%. With a condition if the NAV is equal to or greater than $15. So the $15 means that the $10 is the price of the preferred share and $5 is the price of the Class A share. So of course, if long as NAV is greater than 15 or equal to 15, these types of return will be available to Class A shares. Preferred share receives only a fixed dividend, and at the end they get $10 back of the unit price. So now the point comes, which split fund will I pick using my strategy? This strategy is for me, and I want to warn you here that this video is only for entertainment and information. Please don't get influenced by this video. Make your own decision, do your research, and before you invest in any of these funds. So my investment strategy would be something like this. First of all, when I see all these split funds, first question is where these funds are investing. What are their holdings? I am inclined more towards blue chip stock investments. So those funds who invest into blue chip stocks, I get my attention. Second thing, I will look at the market cap of the fund, how much investment they have. So market cap, as you know, is the outstanding shares times the market price of the share. A third thing would be NAV, net asset value per unit. So that's important because I know for these funds at least $15 is the threshold. So if the NAV is greater than 15, then I get the dividend. So I will look at how high the NAV is compared to their threshold. If it is substantially or significantly higher than $15, yes, I would go for that investment. And after that, I will also look at how many months of payments this fund has missed over time. So, you know, in the stock market, there are ups and downs. There's a bear market, there's a bullish market, and a bull market. So I want to know when there are crash in the stock market, how resistant, how resilient this fund was, how many months of dividend this fund missed. So if it missed many, so then yes, of course the fund is not doing good. So I will also look at a historical history of the fund's distribution of dividends. And also after that, I will look at the premium I would pay for the Class A share. Premium calculation is very simple. We know the NAV, unit NAV is $15, or if it's $17, whatever the unit NAV is. Subtract $10 from there. So whatever left is your book value of your Class A share. So if suppose the remainder after subtracting $10, the remainder is $7, and if the market price for Class A share is $8, so 8 divided by 7 minus 1 multiplied by 100, that would be your premium. So I want to see what premium I'm paying to buy Class A share of this fund in the market. And once I know it is not a lot of the premium I'm paying, I will be interested. And finally, I would see what is the total return, average return, including distributions, yield distribution, plus the growth of the Class A share price. So on average that. I was trying to get that information from Quatervest. It's very complicated. I could not get much information from there because they mention on their website is only total distribution they paid. It's a lot of work to do, get the total distribution and then divide it by the number of years number of years, and then see compared to the price. It's a lot of work to calculate the total average return per year for Quatervest. Although Brampton funds, they do mention their average return per year since inception, and I have indicated in this video. As you know, I have done the previous video, so if you are not aware of this split share functioning, how it works, what are the dangers, what are the positives, what are the negatives of investing into these split shares, please go to that video. I have given the link of that video in my description box, so you can check there. So let's move on, and the first thing first, I want to know where these funds are investing. So first thing, I want to look at their holdings. On the Quatervest website, when I find that holding, so for FTN, I found that they normally they invest into 5 US banks, top US banks, which are JP Morgan, Bank of America, Goldman Sachs, Wells Fargo, and Citigroup. And they also have 6 Canadian banks, 6 large Canadian banks, CIBC, Bank of Montreal, Nova Scotia, National Bank of Canada, and Royal Bank, and also Toronto Dominion Bank, and 4 large insurance companies, which are Sun Life Financial, Manulife Financial, Great West Life, and AGF Management. So very top-notch companies, very stable companies. This is good. Blue chip companies, I'm interested. DFN invests in a diversified environment where it invests into a bunch of industries, including financials. So it invests top six Canadian banks, but also in some energy companies like TC Energy, and also in Enbridge, Canada. Plus, it invests into some other companies like BCE, Bell Canada, Thomson Reuters Corporation, Thales Corporation, Transatlantic Corporation, and Amara Incorporated. So this is a more diversified type of fund, but still investing in all blue chip companies. So that's the DFN. BK is, as I said initially, that it is purely Canadian banks, large six banks the fund invests, and that's what it is. So if I am interested in only in the financial sector, I can go on to BK. FFN, which is a North American Financial 15 fund, it invests top-notch banks of the US, large six banks of Canada, and some insurance companies in Canada. But its share in US financial market is higher. Okay, the Brompton Fund is the first one is LBS, and this fund invests is similar to FTN, but the difference is it is not for US. It says six Canadian banks plus four Canadian insurance companies. So this is the portfolio for LBS. For the other one is GDV, that's Global Dividend Fund. That is geographically diversified. So 50% US, 20% Canada, and the remaining 30% in many other countries like France, Netherlands, Great Britain, Switzerland, Germany, Ireland, Japan, and Norway. It also invests into different types of companies in the US. It is not just sector focused, so it is diversified by sectors as well. SVC is very much similar to Quadrust BK Bank Corporation Spirit Fund, but with a difference that it has one extra portion of Brompton North American Financial Dividend ETF. So it has a little bit of exposure in the US. So that's is a good fund. All investments are blue chip, so I'm happy there. And finally, DGS, which is also similar to the DFN. It invests on Canadian banks, plus, but not heavily on Canadian banks. It only has one bank, which is a Royal Bank of Canada, couple of insurance companies, and then it invests in other stocks. For example, QSR, which is a restaurant brand, Tourmaline Oil Corporation, Thomson Reuters Corporations, Canadian Pacific, Canadian Natural Resources, etc., etc. And it also includes Brompton Global Dividend Growth Fund in its portfolio. Viewers, now is the time to deep dive to these split funds. So FTN, as I said, I will be applying all my strategy factors to see which one is more attractive to me, but you can do your own research. So FTN market cap is $355 million, which is a good one. It's a big fund. End date is December 2025. There's a downside there. We don't know if that's going to be extended or not. So there's a little bit of uncertainty on that side. NAV of FTN as of June 30th. It's been updated on their website, on the Quadrust website, was $17.12, which is well above $15 threshold value. So it means that the fund will be paying to the Class A shareholders 10 cents a month. So missed payments out of 60 months, I just took 5 years data, but you can go as much as you want. You can go it and get this information from yahoo.ca, which is a financial site there, and then you can get more information, but I did for 5 years. 11 payments FTN missed out of 60 months, which is a little bit too much for me. I don't like a fund that misses so many uh, months of payments. So this is the downside of this. Price as of July 5, 2023 was $8.80. So this turns out to the premium of 24%. So for this fund, I think I'm paying quite a bit of a premium of 24%, and there is a risk of missing payments in this fund. But again, you can do your own research. NAV is very good, which is well above $15. So I may consider to invest in FTN if I'm ready to miss and afford to live without having dividends from this split share. Second one is DFN, which is very, very impressive fund after quarter rest. Its market cap is $837 million. End date is again December 24. We don't know what would happen after that. They must be extending it and they might announce it very soon, but we have to wait for that. I had this fund, but then when I looked at the NAV of this fund on June 30th, the NAV is only $15.19. So it means that it is only 19 cents more than the threshold value of NAV. So it potentially can miss some payments if the stock market crashes further. And as we expect that the interest rates are going up, it's quite possible that the stock market may go down. So we might expect to have missed dividend payments. But looking historically, it only missed 4 dividend out of 60 months, and that was mainly in the year of 2020 when there was a COVID-19. Its price at the moment on July 5th was $7, and that turns out to be a premium of 35%. This is quite a bit of a premium. I don't want to pay 35% premium for a Class A share of a fund which has a very, very low or just very close to its threshold value of NAV. So I would like to avoid DFN. BK is a very good fund from QuarterVest, market cap 289 million. And recently they extended to December 2028, which is good, a positive point. NAV as of June 2023, $19.93. Very impressive, significantly greater than their threshold value of $15. Missed payments, only one payment missed in the month in 2020 when there was a COVID, and that was the only missed payment they had. It was in May 2000, March 2020. FFN is a North American financial fund. Market cap $207 million. End date December 2024. Uncertainty there. We don't know if they're going to extend it or they will end the fund. NAV is below 15. So at the moment, there is no dividends are being paid to the Class A shareholders. This is a negative point. Missed payments, they missed 22 payments out of 60 months, which is a bit of a 40% of missed payment. This is a fund that I would not even look further because I can't afford if there is a further decline in the market. Currently, there is no NAV value close to 15. So if the stock market performs even worse or it goes bad, it's very hard to predict if I would get dividend payment. But there's one positive point: the premium is at 0%. So you are getting at zero premium. The price as of July 5 is same price as the book value, $3.7 per Class A share. Now we move on to Brompton Financials and look at the first fund is LBS, Life and Bank Split Fund. Market cap $303 million. End date October 2028. We are very certain that this is at least for 5 years more. NAV as of June 29, $17.44, well above the $15 threshold. Missed payments 8 out of 60, which is a little bit of too much, but that was COVID time. So 2020 was the year when they missed most of those eight payments. Price as of July 5, 2023, $8.60, which turned out a premium of 16%. 16% premium is a really, really good premium. I would like to invest and I'd like to go there. But again, I'm telling you, please make your own research, do your own research and make your own decision. Return rate, as I said before, the Brompton publishes its return rate, which includes price growth and the dividend payments, 9.6% per year, which is pretty good in my eyes. GDV, which is globally diversified split fund, market cap 131 million. It's low because it is a new fund and it started somewhere in 2018, so not very old. End date June 2024, June 2026. NAV is $18.40, which is well above the $15 threshold. No payment has been missed in over the last 60 months. Very impressive performance. Price July the 5th on 2023, $9.90. Premium is only 18%, which is not bad. So for a fund which has missed no payment, no dividend payouts, is available at 18%, I would definitely consider that. SBC, market cap 192 million, because it is investing mostly into Canadian banks. It didn't miss any payment. Its NAV is very impressive, $18.35, well above $15. End date November 2027. But I would prefer BK because BK has much higher NAV value of $19.99 compared to SBC. Again, no payment missed. BK missed only one payment, which is negligible. So it all depends on if you go for higher NAV or you want to go for lower number of missed payments. Premium for this is 15%. BK premium is 31%. So again, it all depends what you want to factor out. SBC is a very solid split share fund. DGS is similar to DFN, but market cap is well below DFN. So it is only 247 million. End date September 2024. We are still concerned. Uncertainty if they are going to increase extend this fund or they're going to close it. NAV as of June 29 is $14.84, below $15. So currently there is no dividend payment to Class A shareholders. They missed 25 months of payments out of the 60 months since 2018. So big time missing payments. I wouldn't go for this kind of a risk. It's up to you. Price July 5th, 2023, $5.01. 5% premium. Why would I pay 5% premium while there is no dividend and there are lots of months of missed dividend history? No, I would not go for that. Total return since inception is 8.3%, which is not bad. It's same as what we get from the overall stock market. So that's what I have information. This is a deep dive of these 8 funds, and now I tell you which fund will I pick. So the secret is revealed now. What would I pick? My choice, I don't like North American banks because they are very volatile. I avoid those kind of investments which include investment in North American banks. So for me, FTN is no question. I would never go there. Although there is a higher NAV for FTN, but still I don't like it because I don't like the sector allocation. Second one is DFN. I really like DFN. It's a good investment, but at the moment NAV is very low, which is about $15.19. No. I can't afford to have missed dividend payments. I need to have income every month. FFN, no way. I cannot think of FFN because it has missed so many months of payments and I can't afford it. At the moment, it's not paying any dividend, so I wouldn't take it. BK is my first priority. I would go for definitely. I like Canadian banks. They had on average around 13% growth rate in and the dividend payment history, never missed payments. So I like BK, and I will have invested very decent NAV for the unit. I would definitely go. On the quarter side, at the moment, I will just pick BK. On the Brompton side, however, I will go for two funds. One is LBS and the other one is GDV. GDV based is although it's a new fund, but I like the geographical diversification. Its NAV is good. It has never missed any payment over the last 5 years. So that's my 3 funds I picked out of 8. Repeat again: BK, LBS, and GDV. So I hope you like this entire analysis. And again, I'm saying do your own research. Let's see in the next video. And till then, bye bye.